We've been given a question. They've asked us to calculate the working capital requirement, and they've given us not exactly a cost sheet, so let's build in our working note or cost sheet for per unit. So we have particulars and rupees per unit, right? And we go ahead and we should go ahead and build in order to find out the per unit items to put into the table below. Okay, I already have a separate video discussing the format of the working capital table, okay, for doing such a sum. Please refer to that in case you get confused by what you see here. Right, so we have rupees per unit, we have amount, okay, and let's just keep adding one after the other. We have raw material, for 80, we have direct labor, for 30, we have overheads. Okay, keep in mind this is a working note, so even if you use short forms, it's alright. Just don't do that in the main answer. Okay, we have total cost by adding all of these up. Okay, and you are going to end up with 160 by adding all of this. Then to this number you can add profit. Okay, to this number you can go ahead and add your profit, and altogether we will end up with selling price. So the profit component is 40. So since this is 40, that means selling price will be 160 plus 40, which is 200. Now what we're doing over here is calculation of working capital requirement. Alright, you all already know the format. We have particulars. After that, any sequence is fine. Units, rate, amount. If you want to put rate first also, it's fine. Okay, unit, rate, time, and then amount. So whether time, rate, units in any sequence, it doesn't matter. Just remember to put amount in terms of rupees at the end. Okay, and the rate is obviously on a per unit basis. And what else do we need to keep in mind? We've been given data for our raw material. Material in production means work in progress. Alright, so we have raw material, we have work in progress, we have finished goods. Okay, all of these are what we call current assets. Similarly, credit allowed by suppliers, okay, this is going to be a creditors. This number, okay, 3 months corresponds to suppliers who we have to pay. People who we have to pay are called our creditors, and that's a current liability. Credit allowed to purchasers means our customers, the people who have to pay us. So those are our debtors, and that again is a current asset. Lag in payment of wages and overhead expenses, both of these are current liabilities. We have to pay. 1/4 of goods are sold in cash, so we have to make sure when we are dealing with debtors, if 1/4 is cash, think of the logic. If we have a pie made of 4 slices, 1/4 is cash, 1/4. That means the remaining 1, 2, 3, and therefore 3/4 is credit. Only with credit sales do we create debtors. So wherever we have debtors involved, we are going to have to multiply it into 3/4. Okay, downstairs. Cash to be maintained, there's no margin of safety in this question. So this is straight away current asset. So now we know what our current assets are, we know what our current liabilities are. Annual production is given to us right here. Everything is given to us in months. So our time is going to be 12 because there are 12 months in a year. Alright, now we are in a position to fill up the particular section of this table based on what we just saw above. So we have current assets, under which we have stock of raw material, work in progress, finished goods, debtors, cash. Once you're done till there, you can get total current assets, which is denoted as A. Alright, and now proceeding, we have current liabilities. And under current liabilities, we have creditors. Okay, and I'm going upstairs to check. We had two outstanding items. So we have outstanding, overheads and wages. Okay, so outstanding wages, outstanding overheads, outstanding wages, outstanding overheads. Okay, and then we can add them up to get total current liabilities, which we can then mark as B. Okay, now that we have the basic structure of our working capital requirement table in place, we are now in a position to start filling up. As far as units are concerned, if you remember, the formula for units. The formula for units is annual production on time. And we have 1 lakh as annual production. Here it is, 1 lakh per annum. And time we already decided is 12, so 1 lakh upon 12. But the problem with this, it gives us a non-terminating decimal, 8,333.33. That means on the calculator, you need to lock this full amount, 0.33333. Otherwise, every time when you're calculating, you do 1 lakh upon 12. Either way, you'll get the correct answer. For presentation purposes, let's just write 8,333 corresponding to all items here. So 8,333.33, and that repeats everywhere. We're going to write the same amount under units. Of course, it's nice to leave a comma. And keep in mind, we don't do it for cash because the cash amount is directly given to us, and we can look at that upstairs again. Otherwise, everywhere else we can do this. When we're actually doing the math, you take 1 lakh upon 12. Or alternatively, you will write 8,333.3333 all the way to the end of your calculator, and then only do the math going forward. Otherwise, you may end up with the wrong answer. Always round up once you make use of units. Anyway, raw material is here. I know that the rate is 80. So I'm going to scroll down slowly and fill up 80 for rate. Remember, total cost is always finished goods. So we have 160. Unless and until they specifically tell you. Let's look at the question. Have they told us how to value the debtors? So they've only said that credit allowed to purchasers is 2 months. Assume production is carried out evenly throughout the year. Nowhere have they said at what value to keep for debtors. If they don't tell you anything, take it at selling price. That's why I'm going to stick to this and place 200 over here. Now, you may have noticed I've not done work in progress yet. I'm going to leave that for next step. I'm just going to fill up everything that's available. Creditors are for what? What are the creditors giving us? They're supplying us, right? They're supplying us with raw materials. So the same 80. And then we have outstanding labor and overhead. So 80, 30, 50, one below the other. 80, 30, 50. And remember, labor's wages. We forgot to put 8,333.33 here. I've done it now. Okay, so I am done with most of rate. I need to go ahead and calculate work in progress. What have they said about work in progress? It's there for half a month, that is time, but no other information. So we know the formula for work in progress. Okay, and let's see, do we have space? I'm going to do it over here. You all should keep it in a working note somewhere. Work in progress is equal to raw material plus labor plus overhead upon 2. Our raw material is 80. Our labor is 30. Overheads is 50. So 30 plus 50 upon 2. Now do it on the calculator, and please remember there's imaginary brackets here even if it's not there. Why? Because there's a division here. 30 plus 50 is 80. 80 upon 2 gives you 40. So 80 plus 40 is equal to 120. Your work in progress amounts to 120. Okay, so your rate over here is 120. And now it's about time. Okay, so remember, this is raw material, work in progress, finished good. We've already mapped it. 1 month, half month, 1 month. Okay, so 1 month, half month, 1 month. Okay, I'm going back upstairs. Credit by allowed by suppliers. These are our creditors. Debtors is 2 months. Creditors is 3 months. I'm going to fill that up first. Debtors is 2 months. Creditors is 3 months. Okay, going back upstairs, I am going to check out lag in payment of wages. They're saying half a month. Overhead 1 month. Okay, so wages is half a month. Overhead is 1 month. Anything else given to us? Okay, 1/4 of the goods are sold against cash. That means only 3/4 is against. 3/4 is credit. So where we have debtors, okay, this number has to be, okay, so 1 lakh upon 12 has to be multiplied into 3 by 4 throughout, everywhere. Alright, so I'm just going to make it a little neater. Right, I hope my handwriting till here is readable. Okay. We have 8,333.33 into 3. Okay, not helping, into 3 by 4. Alright, so throughout into 3 by 4. Why? Because 1 by 4 belongs to cash. Now, cash in hand and in bank is desired to be at 4,50,000. Okay, so I'm going to take this, put it directly outside. Okay, 4,50,000. Now, anything else I need to factor in? That's it. I'm done doing everything. I now simply need to calculate the total current assets, total current liabilities, which is A and B, in order to get average working capital requirement. Okay, and that can be found by taking 8,33,333.33, okay, into 80 into 1 for this first one. Okay, so 6,66,666.67. Right, yes, it's a little irritating where we have decimals. Okay, 6,66,666.67. Then we repeat the same thing, and I'm going to do it again. you have a choice. Do you do 8,333.333333 and then do the math, or simply take 1 lakh upon 12 and you get that number without having to worry? Okay, so into 120 into, now you see how magically it turns into 10 lakhs. In your calculator it might be 9,99,999. Even then, round up. Okay, so it's into 1 by 12. So into 1 divided by 2. 1 by 2. So 5 lakhs. Okay, so flat 5 lakhs for work in progress. Okay, and again we are likely to end up with decimal over here. So 1 lakh upon 12, or 8,333.3333 all the way into 160 into 1, which gives us, okay, 13,33,333.333. No problem. 13,33,333.33. Debtors we have. Okay, maybe debtors is going to give us some relief. Okay, so like this all the way, or simply 1 lakh upon 12 into 3 by 4 into 200, okay, which is our rate, into, okay, so 25 lakhs flat, 25 lakhs. And I'm going to go ahead and add it up now only because I have everything on the calculator. Anyway, I have 25 lakhs. I'm going to start from the top, plus 6,66,666.67 plus 5 lakhs plus 13,33,333.33 plus 4,50,000. Okay, remember we already started with 25 lakhs. So we end up with 54,50,000. 54 lakh. Okay, and you have to have your bearings right. So this is cash. This is going to be current assets. Okay, so 54 lakh, 50,000. Now, going forward, we have current liabilities. Okay, and we can take 1 lakh upon 12 again. 1 lakh upon 12. Okay, into 80 into 3. Okay, which gives us 20 lakhs. Which gives us 20 lakhs. Then we repeat the same thing. Okay, so 1 lakh upon 12 into 30 into 1 by 2, which gives us 1,25,000. Which gives us 1,25,000. Then we have 8,330. Okay, 3.333333. Otherwise, again, I'm saying just do 1 lakh upon 12. Gives you this into 50. Okay, looks like we could not escape the decimal. 4,16,666.67. 4,16,666.67. No problem. And we add them up. So it's going to be plus 1,25,000 plus 20 lakhs. Okay, so 25 lakh, 41,000. 25 lakh, 41,666.67. Okay, and that's my total current liabilities. Remember, total current assets, I have this. Total current liabilities, I have this. And now I can subtract. So I'm just going to take this number and subtract 54,50,000. Okay, and I end up with 29,08,333.33, which is your average working capital requirement. 29,08,333.33. Okay, I hope this is clear to everybody. Anybody having doubts, feel free to message in the comments. Okay, with this we are done with the question. Thank you.